Hi there, it's Phil C here with you from Brisbane City. This is where this is recorded. And on today's video, before we get into that, can you please ask a favor of you? Can you please like, share and subscribe this and help me reach as many people as possible? If you enjoy my analysis and my style of trading, please help me reach as many people as possible.
Welcome to Star Prosper with Phil C.
Trading doesn't have to be overcomplicated. It can be simple, clean, straightforward, and very enjoyable for all of us, right? So please help me share it out and reach as many people as possible. Like and subscribe if you haven't already. That would mean the world to me. I appreciate you, and I'm grateful for you spending time with me here, because that is the most important currency that we all have. Time is precious. I'm truly grateful that you have decided to spend it with me. Now, on the pound yen 15-minute time frame, I'm going to go over 3 conditions that make up the bat pattern. Yes, another bat pattern, because these seem to be everywhere right now. So it's an intraday trade for me here in Brisbane. I don't know why I did that. So here is an intraday trade for me here on the pound yen 15-minute time frame in the form of a bat pattern. So let's go over to the charts, draw it up, mark it up, and go over it together, and join me on your trading view or platform of your choice and follow along and draw up the bat pattern with me together. All right, let's go to the charts. Right. So just have to move my stop loss to break even. And what this is we are going to pound yen on the 15-minute. Yeah, so I want to do this on TradingView. I like using TradingView. And what the trade was a move from here to there, which is our impulse leg here. And then we had a move down here. Then we had another move up, and then we had a big move all the way down here. Okay. And the intraday trade that I got involved with was actually my orders got filled overnight here. And if I grab a Fibonacci retracement tool, we're going to start identifying another bat pattern, because again, those have been everywhere. So what we did right here is we had this initial move up like this. Okay. Now, I've been covering this quite a bit, and I decided to do it again because repetition is good. We're training the RAS, your reticular activating system. The more that you see bat patterns, the more that we go over it, the more that we draw them up, mark them out on the charts, the more that you start to see them and pick them up, right? So we have the Fibonacci retracement, and we go from our swing low to our swing high. Everyone knows the first condition of the bat pattern is a minimum of the 382. We get that right here. Minimum of a 382 Fibonacci retracement from X to A. And what we'll do in this video is we will mark it up like this. So we have our X here, and then we have our A here. So change that to A. Oops. So this is our X to A. And just squash that up a little bit like that. Easy to see now. Right there. And then, after condition 1, we are looking for condition 2. And we take the Fibonacci retracement tool yet again. And we will go from A to B. So actually, I get my text tool like this. And this is B right there. So Fibonacci retracement, and we go from A down to B, like this. Yes, the minimum of this one is the 382. That's right. So price action pushes up into a 382 and then all the way up into an 886. So we have the minimum. Price action is resting at the 886, and then after that we get a move to the downside. So we have condition 2 met. Text tool, and this is our C point right here. And then the last condition met was a Fibonacci retracement tool, swing low to swing high. Now why did I say it was? Because as we get a move down this point right here, this is no longer valid anymore, right? Because price action closed below the X point looking there. Now it turns into an alt, potential alt. But price action moves all the way down, triggers us in the 886, even though it moved past our X point and became invalid. Oops. Even though we moved past our X point, it became invalid. We are still in the trade, no matter what. Because once we execute the trade, and then we're in the trade, we don't exit the trade. Right? Why is that? Because prior to executing the trade, we knew our entry stops and targets. And once we put the trade on, so once that trade goes live, price action is going to do one or two things from there. It's going to either hit our targets or stop us out. Right? So that's it. As price action moves down here and price action closes below our X point, the pattern becomes invalid, but we're still in the trade until we get stopped out. Those are the rules. That's how we backtested, and that's how we continue to trade the live market. So C all the way down to D right there, and that is text right here, D point right there, and then we are at the 886. This would be our buying zone for the BAT. Excuse me. At 162.580s. Where's my spreadsheet? 162.596 is where I got in at. 162.596. 59. That'll do. Yeah. So that's where I got in at. Stops are below the X point, so around at the 113 there. And targets were at a Fibonacci 382 and 618. So this is the last condition 3. All the way down, price action goes all the way down into the 886. I think I quickly just went over that too fast. So Fibonacci retracement from X all the way up to A, and what we're looking for is price action to come all the way down into an 886. Once price action comes into the 886, then I have all 3 conditions met and I execute the trade. So price action came down and triggered our limit order. And this is what it looks like. Triangle tool, we draw it in. We have X to A to B, B to C, and C to D all the way down here. Okay, and we're currently involved in the trade right now. So for targets, and we hit target 1, we have a Fibonacci retracement from A all the way down into where price action turns right here. So full leg of the move. Initially, the targets were at Fibonacci A all the way down into D. So my target would be 382 and 618 right here. Okay. But with pattern trading, with ratio trading, as price action presses down, what you want to do, it's vital that you do this, is we always want to roll our fibs with price action, okay? Because that way we're always measuring, okay? So that means you would have to roll your targets all the way down into the new target right here. So 382 and then 618. And price action, just before the recording of this video, price action pushes all the way up into a 162.860s, right? When did I get up? 162.827. 827. So just front run a little bit closer right there. And then we got about 23 pips out of the market there. So once that happens, right? Once price action, as we're rolling our fibs and adjusting our target levels, again, you want to front run and account for the spread. What's happened there is we're measuring Fibonacci as price action pushes down. And then once price action hits target, if it hits target, if then syntax, then we roll our stops into break even. So we had our stops initially below the X point looking left. So make that red right here. So as we hit target 1, I'm pressing up again into that level, we roll our targets to break even like this. Okay, so now we're in a risk-free trade. As price action hits target 1, we take off half the contract because we're always trading 2 contracts here, 2 positions. Okay, that's what we do in the live room. And then price action, if we get a move up here, we can close it out for target 2 for the balance of the position. Or if price action comes all the way back down, we get stopped out for break even. Again, because once we're in the trade, price action is going to do one or two things. It's either going to stop us out or it's going to hit our targets. And this means we stay trading the plan. This is what we've tested. This is what we trade consistently every single day. So we're being disciplined by following our trade plan. And over time, win or lose on this trade doesn't matter. Remember what I say in the live room all the time. I hit on it, hit on it. Win or lose, it doesn't matter. You can actually take that a little bit step further. Win or lose on this trade, I still made money. Oh, but Phil, how is that possible? Well, if you know your numbers and you treat this as a business, on average, you can work out how much money you make every single time you execute this trade. Every single time you take this trade. Right? That's the exciting part of trading. That's the incredible, powerful part of trading. Because that does an incredible lot for your state management and your psychology in trading. We just finished the month, last month, negative. We had a negative month, right? Finished it up with a drawdown. But it doesn't matter. I can come in and trade the new month, the new week, with absolute certainty that if I just stick to this, that which I've tested, over time, I'm going to be making money in this. Over time, I'm going to be profitable. That comes about by understanding that your strategy that you're trading in the live markets has a positive expectancy. Right? And it's an emotional liberating feeling to have that and to trade in this way. It's very powerful to be in a position where you are in control of your state. See, psychology in trading is the secret ingredient. Trading this plan, trading with discipline, every single day sets me up for consistency. If I'm consistent in my analysis, consistent in my approach, consistent in executing the trade plan, I'll be what? Consistent in my trading results. So back to whether this, because I think this is really important to understand. Every single time I execute this trade, doesn't matter if this trade wins or loses, it actually made me money. Because over a 12-month period of trading this strategy, you can work out on average how much you're winning every time you take this trade, every time you execute this trade. But you can only do that and trade in this state if you understand your numbers, if you know your numbers, and if you're treating this trading as a business. Because that's what this is. You know, and for some of you, it's an entirely new profession for you. Anyway, the point that I wanted to make is, now I can trade this month by having faith in that which I'm trading produces me a positive expectancy. So the last month doesn't matter. This month doesn't matter. What matters is that I'm trading this plan consistently every single day. And as you're getting results, that reaffirms and builds your discipline. So trading this with consistency is the key to getting those consistent results.